Welcome to the Startup Grind.
So thank you for taking your time and flying down here. We just want to talk a little about you. Where were you born? Where were you raised? And what immediately did you do after high school?
So born and raised in Toronto, or a suburb just out of Toronto. And after high school, really didn't know what I wanted to do, so fell into business school, like most people. Came out of business school, still didn't know what I wanted to do, so got into accounting. Realized really quickly I didn't want to do accounting. So then moved into more of a corporate finance, investment banking role. Then realized, as I started working with companies and helping them raise money, that was fun, but, right at the point where you start to learn about the company and get interested in the company, you'd be off and on to the next deal. And so then I ultimately fell into venture capital.
Okay. What or who influenced you to choose your career path?
That's a good question. So, and actually, I'd admit that when I was in banking, I actually thought I wanted to go into private equity. My background was very suited to it. I was obviously heavy in the finance experience. And so when I was interviewing for private equity funds, I was supposed to meet up with somebody for a beer. We'd meet every once a quarter. And over a beer, he said, "Hey, have you ever thought of venture?" And truthfully, I said, no, not really, but what the hell? I'm young and sounds cool. And so I started meeting with some venture funds and realized very quickly that career path was actually much better suited for me, because what I really love to do, if I really got down to it, is working with entrepreneurs and working with startups. And I found that path allowed me to get a lot deeper and a lot more engaged with companies.
Awesome. Okay. How long have you been in your role as director of OMERS Ventures, and what does that role consist of?
So I started with OMERS Ventures really when the fund was created, which was about 3.5 years ago. I have a bit of a unique role as director. I'd say I spend half my time on the investment side, so that's doing very traditional, venture investing and sitting on boards and helping companies however I can. And then the other half of my job is spent more, I loosely say, managing the operations of the fund. And I had a couple great meetings today with startups, and what I like to tell people is, I manage a startup, and me and my team, we manage a startup, and that's doing everything. If there's any entrepreneurs in the room, it's doing everything that you do on a daily basis, whether it be hiring or budgeting or even fundraising. We got to fundraise as well, and so that would take up 50% of my time, I'd say.
Okay, cool. And for those who don't know what OMERS Ventures is, can you tell us a little bit about what the company does and is?
Yeah, so OMERS stands for the Ontario Municipal Employees Pension Plan. So we manage the pensions of firemen, police officers, and such. We're one of the largest pension plans in Canada. But one important thing to note is, pension plans in Canada, unlike some other pension plans across the world, we tend to be investment leaders in our industries. OMERS particularly, they have over 100 billion in assets under management. That's with a B. And that's in every major asset class that you can think of, whether it be real estate, private equity, infrastructure, capital markets. And most recently, they decided to allocate some capital into venture. We're the only pension plan in Canada that has a venture capital fund. And 2 years ago, the pension plan made an initial $200 million allocation to the venture fund. And today we manage close to $450 million. And again, that may not sound like a lot to you folks here, but $450 million under management in Canada makes us one of the largest funds in the country, and by far the most active fund in the country. So in the last 2.5 years, we've deployed over $250 million in capital into some of the country's best tech companies, and I think we're up to 22 investments now, which is quite a pace for the Canadian landscape, and happy to say that I think we're changing the Canadian landscape as it relates to venture.
That's amazing. So being a director, I'm sure is very very hard. So can you take us through a typical day of the life of Damien Steel?
You say it like that. So I'm I'm an early morning guy. So I'm in at call 7 a.m. And try and get as much work done before the rest of the world wakes up. And safe to say, what's interesting about my job is I really don't know what I'm going to do for most days going into the day. I have my own tricks that I use. I try not to schedule more than half my day. Using my calendar. And the reason I do that is because, I work very closely with the entrepreneurs in some of the companies that I've invested in, and you don't know when they're going to need you. And, one of the most exciting parts of my job is when a CEO picks up the phone and calls me and asks for my opinion on something. So I need to make sure that I'm available for those calls. And so, I schedule half the day. I really don't get to anything that I use my little sticky note every day to-do list, and I probably get to it about 6 p.m. and then I say, crap, I haven't done anything on my list and I better start doing it. So it's exciting in that I really, you're just putting out fires all day, but it's really interesting.
How close would you say that you worked with, since you have so many, how close do you work with startups?
With the portfolio companies? As close as they want me to. So, this is a very personal comment now. You'll talk to different investors and they'll have different opinions on this, but, I don't want to run their businesses. And so, I'm there to be a sounding board. I'm there to challenge them, to maybe challenge their assumptions, and I'm there to help them whenever asked. I try and keep regular contact with my CEOs just because I like to know what's going on in their business, but very, very rarely will I inject myself into that business.
Okay, cool. So for the people who don't know what a VC versus angel investor is, can you explain that a little bit for everybody?
So it's an interesting question. So there's the easy answer, which is an angel investor typically invests their own money, whereas a venture capitalist tends to especially an institutional venture capitalist tends to invest other people's money or other institutions' money. But to the people in the room here, the important distinction is actually much deeper than that, which is because an angel investor invests their own money, they have complete flexibility over that money. They can invest in whoever or whatever they want, whenever they want, however much they want. What entrepreneurs need to realize is whenever you're dealing with a venture fund, and specifically a institutionally backed venture fund, they're governed by quite a long set of rules. There's a document called we refer to it as an LPA, which is a limited partner agreement, and I'm working on one right now because we're raising some capital. That 100-page document describes all the rules by which we as a venture fund have to follow with our investments. And so that includes things like what types of companies we can invest in, only tech, or maybe you can do tech and clean tech. That describes how much money we're allowed to put into any one deal. So there's limits put on venture funds into how much money they can put into one deal. So, the investors of the venture fund force diversification down onto the venture fund itself. It covers things like how we're compensated. And trust me, if a VC tells you that doesn't impact how they invest, they're lying. And it covers a whole bunch of other things that are actually really, really important things for an entrepreneur to know when they're going out to raise money. Because if they know the answers to all those things, they can be much better prepared on how to actually position your story to resonate with that specific investor.
Okay. What does OMERS Ventures look for in companies to invest?
So I can tell you what I look for, and I would say this is probably a common theme across our partners, because every partner will have somewhat of a different strategy. But really, we're looking for great founders and great management teams. I'd say I've been in the venture business for 10 years, and if I think back in all the exits that I've been involved with, it's fascinating how many of those companies weren't doing what they said they were going to do when we first made our investment. There's always some little change, and so if you would have invested just based on the first idea, you would have been sadly disappointed. Whereas I think if you focus more on the people that are running the business, we're looking for entrepreneurs that are obviously domain experts. You got to know what your field, you got to know what you're working in. People that are passionate, have a level of intensity. I don't think, generally speaking, I think startups in California, intensity is not the challenge. Whereas I think in Canada, sometimes, as Canadians, I think sometimes we lack some types of intensity. And then just, really looking for, this sounds cliche, but billion-dollar opportunities, and opportunities that can be global. And again, that's a bit of a Canadian comment, we're not interested in Canada-only opportunities, because not that Canada is not a great market, it just speaks to the size of the opportunity. And again, back to my comment I made in the last question, which is, you got to learn who your investor is when you're going to pitch them. For us, for OMERS, as you can imagine, we're a $100 billion pension plan. We're looking to make investments that move the dial. And so if we're not looking for those billion-dollar opportunities, they're not all going to become billion-dollar companies, unfortunately. But unless we're striving for that, ultimately we won't generate the returns that are expected from us, from the organization-wide.
Okay. So you guys invest in Canada, also United States, and other countries. What are the major challenges you guys face crossing international borders?
Yeah, anytime as an investor, so our whole team is based in Toronto. And I'd say the further away we get from Toronto, the more challenging that is. I would say we're a fairly active investor. We like to be involved with our companies, and obviously that becomes more and more challenging the further away from home you get. Also, I'd say, our strategy very early on, 3 years ago, was really focus on Canada. Although we do have a global mandate that's part of the OMERS mandate. But our goal was, let's nail Canada first. And then, at the same time, what we thought is, there's some really interesting opportunities in the U.S., but we're not arrogant enough to think that we're going to see something in a U.S. company that everybody else missed. And the reality is, if a U.S. company cold calls OMERS and says, hey, we're raising funding, likely they've been to everybody else in the U.S. and they got to know. And so what we've done is we've leveraged some really key relationships with co-investors or other Canadians that are down here, and we leverage those investments, and we're slowly, as we start building a brand, we're 3 years in, we slowly start getting pulled into some of those interesting opportunities. And so DogVacay, which is our first U.S. investment, which is up here, or just north of here in Santa Monica, they're a great example. Very, very close friend of the fund, was an existing investor in the company, called us up one day, said, hey, we have a great opportunity in a fantastic company with a really passionate founder. Do you want to look? We jumped on a plane the next day and came down and looked and did that deal very quickly. And I think, that's what we're going to have to leverage as we go outside of Canada, because it does become challenging as you start, you spread yourself a little thin.
Mm-hmm. Awesome. Can you tell us a little bit about some of the more successful companies you've secured funding for?
Sure. So, DogVacay is a great one.
Right.
And it's close to home for you guys. That's a company. If anybody doesn't know what it is, if you own a dog and you're going away on vacation and you don't want to send your dog to a kennel, this is an online marketplace for you to connect with people locally who are passionate about animals and are willing to look after your dog for whatever they want to charge, kind of like an Airbnb model. Again, hugely passionate founder who is an absolute, to say he's a dog lover would be an understatement. You go into their office and there's, I think the last count was there was close to 30 dogs in the office. And there's 45 employees, or there was when we made the investment. So it's crazy. You walk in and there's dogs everywhere. It's fascinating. That was a really interesting company. PasswordBox was another really interesting company out of Canada, which was just sold to Intel, and they're in the login, password, and credential management space online. So try and remember 100 passwords today and you blow your brain. So the idea was you remember one and it kind of plugs it into all your spaces. Those would be kind of two top of mind.
And what is the process for those companies like?
It differs. Like, honestly, you can have... what was interesting is both of those companies, from the point where we got the call and found out they were fundraising to the point where we closed, was very, very short. And that happens sometimes. Sometimes you see a good opportunity and you're like, man, we got to jump on this, and you drop everything. And literally, DogVacay, I got the call on a Thursday, we flew down to Santa Monica on a Friday, and we gave them a term sheet on Monday.
So did you say that was like the shortest?
That's pretty short.
I think so.
Yeah, that was a long weekend.
Yeah.
But, you know, what I would say to most founders, and I've said it a couple times, I met some really cool companies today, is as an investor, I would much rather meet a founder and a company before they needed money. And that can be beneficial both ways. One, it allows me to get to learn about the founder and what they're all about. And similarly, the other way happens too, right? So it gives me an opportunity to show some value to that founder. And what entrepreneurs need to realize is, you know, when you take money from a VC, you may not realize it at the time, but most of the time, you're talking about a 5, 6, sometimes 10 plus year relationship. You better figure out if you like that person and if you can work with that person. And so, for me, the optimal fundraising process for a company is you're always fundraising. You know, you should know anytime who are the people you would go talk to tomorrow if you had to raise funding, and they should know who you are. And if you're always doing that, if you're dedicating a little bit of your time to keeping in touch with investors that understand your space, when it comes time to fundraising, it's easy. Or hopefully it's easy.
What would be a deal breaker in the process for different companies like that?
It would come down to the founder. You know, and this is a very personal thing again, but too much ego. You know, there's things that you do in a diligence process to find out about a person's character and about a person's integrity, and it probably sounds cliche, but that stuff really, really matters. You know, when business is going good, that's all great, and it can hide a lot of flaws. But you want to know what's going to happen, what's this founder going to be like when business, you know, everything goes like this in venture world. And so what's this individual going to be like when their feet are to the fire? And so that's what we're looking for, is really trying to see what type of people they are. And I'd say if I got some inclination that somebody was something as simple as being untruthful, that would just kill a deal immediately, hands down. So it really relates around the team.
So what types of things should startups look up for in a VC?
Again, you want to really try and focus in on who's leading the deal. You know, who is the leader at that specific venture fund that you want to target. You want to find somebody that understands your space. I would challenge you all, if you're ever fundraising, to actually pick up the phone and call some of the other CEOs that have taken money from that individual. It's amazing what you'll learn. Take them out for a beer, you'll even learn more. And do your homework. And because it's you know, venture funds put out, you know, these great websites with these great visions and these great, you know, statements about what they do. But I would argue, it really comes down to that individual and how they work with companies. And again, what I said about the investor what I look for in entrepreneurs, it works both ways, right? You're embarking on a 5 to 10 year relationship with that person, and this person is likely going to be sitting on your board. You're likely going to be giving up control of your business. You know, I always tell entrepreneurs, I don't want to control your business, but I don't want you to control it either. Right? So, you know, you set up a nice balanced governance structure, and you know, but that's a big pill for people to swallow. Now, back to your angel versus VC question, that's actually one of the big differences. Is an angel investor is happy to invest in your company and let you control the company. OMERS won't, and I would argue that most large VCs would not either. You'll always have exceptions, but generally speaking, good governance, balanced board, you get two, I get two, and we have an independent to break a tie. And ideally that never becomes an issue because, again, you've found somebody who you understand how they work and you work well together.
What has been one of your most successful decisions or least successful?
Easy. It's my anniversary tomorrow, so marrying my wife was the best decision I've ever made. But in all seriousness, in all seriousness, though, it is because again, we're getting personal now, but my wife, she's a nurse. So she's not in the investment industry. She's not in the finance industry, and I would say that she grounds me in a way that I wouldn't be able to get otherwise, and that actually helps me a lot in what I do on a day-to-day basis, dealing with entrepreneurs and all of their problems, and then our fund and all of our problems. It's level setting and refreshing to come home thinking that you had a stressful day and then, hear about your wife who gave open chest CPR for 5 hours. It's like, okay, my problems don't really matter so much. Yeah.
Is there one thing that stands out you've learned over the years that might be helpful to a startup?
There's a whole bunch of things, but, don't get fixated on one thing. So, if you look, again, I challenge you to look back at companies that maybe founders that have had successful companies. And in most cases, I would say that every company has its ups and downs. And so try not to get too high with the highs and not get too low with the lows. And try and keep this kind of even keel. And I think that can be well served. And then I always, I already said always be fundraising. Always be doing that BD work on the side. And lastly, accept that you don't know everything. Accept that you probably don't know much at all, and surround yourself with people who do. One of my favorite quotes is Jack Welch, who said, his goal was always to be the dumbest person in the room. And I think that's a very interesting kind of motto to have, especially as a startup, right? I mean, you think of what you have to do in order to start a business, in order to, mortgage your life and really put your whole life on hold while you throw yourself head feet into starting a business. I understand how it can be easy to want to control everything, right? You're risking everything. But I can tell you from having worked with, hundreds of startups, that's the worst thing you can do because you're only one person. And so, as you scale as a business, I challenge you to, especially once you have funding, hire ahead of when you need those people and really, really aim high. Don't just hire somebody on a whim because you think it's what you need. Challenge yourself to find the best people because you are only as good as your team. And I've learned that kind of time and time again. That's advice.
I like that. You're only as good as your team. How can we as a community support as well as attract VCs like OMERS Ventures to Orange County?
Keep the weather like it is would be just perfect. Call us in the winter. We'll return your call. In all seriousness, I think it's you need to succeed as a community, right? So one company isn't going to change anything, and success breeds success. And look, as investors, as VCs, I'll let you in on a secret. We're like lemmings, right? You see one go off the cliff, and we all jump off the cliff. And so, you start having a couple wins in this area. Buildings and communities and events like this are a great way to get started. And celebrate your winners, right? You want to, winners breed winners, and so what you'll find is, you'll get one great company, and that one will sell, and then those people will leave and start other companies, and that's really how you start to get an ecosystem going, and that will bring the investors. I mean, we just follow the money. There's no secret to it, right? And so focus on yourselves more and those around you, and less about trying to attract people, and they'll show up, especially the investors. Awesome.
So the last question I have for you tonight, before we take a couple of questions from the audience, is what's next for Damien Steel?
You keep saying my name like that. Honestly, when I joined OMERS, it's just a very quick story because it helps me set up this answer. I had a coffee with the CEO. He asked me to coffee because he knew I was leaving the fund I was at, and he says, so what are you doing next? And I said to him, I'm like, well, I'll tell you what I'm not doing next, and that's going back into venture. And then I went into this whole kind of rant on things that are problems that I saw in the Canadian venture capital industry, which is very unique. It's not necessarily things that are prevalent in California, especially. And he then went through a list of like why OMERS was different and why we were going to really kind of change the industry and breed billion-dollar companies, which really hadn't been done in a long time. And so I committed to 1 year. I said, sure, I'd just gotten married, just bought a house. I was like, now is not the time to go join a startup. So I'll go be an investor. So I went in, and happy to say it's been 3.5 years, and I am more excited today at the prospects at OMERS Ventures than I was 3.5 years when I joined. And our goal is to be Canada's first, or first in a while, billion-dollar venture fund, and that would be a globally focused venture fund, and that's exciting for me. Like the idea of having a real impact on the Canadian ecosystem is super exciting, and so I am head down, and hopefully I'll be at OMERS for quite a long time, and that's actually the first time in my career in a long time that I've said that, so it's exciting.
All right. Well, congratulations on all your success. Thank you, Damien, for sharing your story with us tonight.